On Wednesday night, 17 Democrats joined with almost every Senate Republican to pass what's being called the Bank Lobbyist Act. It's a bill that would raise the threshold under which banks are subject to certain requirements of Dodd-Frank from $50 billion up to $250 billion. And when you move it up to $250 billion, that means that almost every bank in the country, except the very biggest ones, are no longer going to be given stress tests and put under the other kinds of regulatory pressure that Dodd-Frank applied to try to prevent the next financial crisis. Now, of those 17 Democrats, it turns out that 7 of them stand to personally profit through their investments in some of those banks. And we know this because of the investigative reporting of TYT contributor Alex Kotch, who's joining us here today to talk about this. Alex, what did you find when you started looking through the personal finances of some of these Democrats who ended up voting for this Bank Lobbyist Act?
Yeah, well, I mean, I started with Heidi Heitkamp because she was the chief Democratic architect of the bill. She worked with Mike Crapo and several others on both sides to craft this bipartisan bill. And it didn't take me too long digging into her financial records to find that she and her husband collectively own about up to $250,000 in J.P. Morgan stock and up to about $600,000 in Berkshire Hathaway stock. That's the company owned by Warren Buffett, which operates numerous subsidiaries, including one that makes manufactured homes and a couple others that actually give the loans to buyers of these types of homes. They're also going to benefit from the bill. And I should say that J.P. Morgan, a bank like that, they have more than $250 billion worth of assets, but there are other provisions that you guys revealed at The Intercept that are going to help banks of that size too.
So how exactly is Berkshire Hathaway benefiting here? So you said that they're the owners of a company that makes mobile homes, that makes trailer homes, and that makes loans for people to buy these trailer homes. So what does the bill do that would help Warren Buffett's fund here?
Right. Well, so it first of all, it lets manufactured home or mobile home sellers steer customers towards their own lending businesses and into some of the types of bad loans that led to the 2008 financial crash. So that's one thing. Another thing is for smaller banks, but it also has to do with these mortgage issues. Smaller banks that give 500 or fewer loans for these types of mortgages per year are going to be allowed to not report some key data, including racial data, that the Consumer Financial Protection Bureau, since the Dodd-Frank Act in 2010, has been using to try to make sure there's not discrimination in housing.
Right. So after a year in which the media has been talking about the narrative of the white working class elevating populism to the White House, you're telling me that Congress is responding by screwing people who own trailer homes and squeezing every last drop of money out of a person whose situation has put them in a place that they're moving to a trailer park anyway.
I mean, it sure sounds like that. And you have financial experts like Elizabeth Warren, who really was the architect of the Consumer Financial Protection Bureau, saying that there's literally nothing redeemable about this legislation. And you have people like Tim Kaine, who doesn't have investments in these companies, but is from the purple or even blue state of Virginia, who voted for the bill, who in the past has spoken out against racism, signing on to this bill that is almost encouraging more racism in the mortgage business.
Yeah, not just speaking out about it. Tim Kaine, and on the campaign trail, he talked about this a lot, and he's very proud of this. His legal career began as an attorney fighting for fair lending and fighting against discrimination in the mortgage market. It's kind of his touchstone achievement in his political career to see him voting for this bill that undermines the ability to enforce fair lending laws is quite remarkable. So Heidi Heitkamp, who was one of the lead authors of the bill, you laid out pretty well. What about some of the other 6 Democrats? What kind of investments do they have?
Right. So Claire McCaskill of Missouri, she's another vulnerable Democrat. In other words, she's running for re-election this year, and in a kind of a red state. But she and her husband collectively own over $1 million of stock in Berkshire Hathaway. So that's a pretty large investment. You've got Gary Peters of Michigan, who owns up to $250,000 worth of stock in 5 of these big banks, including Bank of America, BB&T, the Swiss bank UBS, which has a lot of billions of dollars of U.S. assets, et cetera. You've got Joe Manchin of West Virginia, whose spouse owns up to $100,000 worth of Huntington Bank share stock. That's another bank that's in this threshold between between $50 billion and $250 billion in total assets. A so-called stadium bank. Doug Jones, the latest addition to the Senate on the Democratic side, he owns up to $100,000 of Regions Financial Corporation stock. That's another one of these stadium banks. The independent Angus King of Maine owns up to $50,000 in U.S. Bancorp stock, and Tom Carper of Delaware owns up to $45,000 in Bank of America, Goldman Sachs, and Wells Fargo stock.
So they call them stadium banks because they're not big enough to be the kind of the J.P. Morgans or the Citigroups, but they are big enough that you see their names on stadiums, PNC or M&T Bank, and so congressional staff have taken to calling them stadium banks to kind of distinguish them from community banks. But Alex, why is this legal? What are the ethics and the laws in place that would allow members of Congress to hold investments and then cast votes that would benefit their investments? I'm sure people watching might think that sounds like it ought to be illegal.
Right, it sure does. And if you kind of skim some of the ethics rules, you might still come out thinking that it's illegal. But in fact, it's perfectly legal what they did. What the Senate Ethics Manual says is that if you're a legislator and you're working on a bill or you're voting on a bill, you're not supposed to participate if the principal purpose of the bill is to benefit a specific limited class of people, which generally can be interpreted as you, yourself, or your family. So a very small number of people or one sole company.
So you can't appropriate money directly to yourself, but otherwise you're good.
Well, yeah, because the loophole here is that this bill, like the tax bill before it, which had a similar situation with these financial conflicts of interest, applies to larger classes of banks, larger classes of businesses, larger classes of people, clearly the upper classes in the economic ladder. So it's fine what they're doing because they're not the only beneficiaries of this legislation.
Right. And one way out of this might be to not have so many rich people in Congress, and maybe we'll get there eventually. Michael Kinsley, a longtime Washington reporter, once said that the scandal is not what people are doing that's illegal. The scandal is what people are doing that is perfectly legal, and I think your story here is a perfect example of that. Alex Kotch, thanks so much for joining us. Great reporting here on TYT Investigates. If you're watching this, make sure to subscribe to TYT Investigates. Share this with your friends. Tell them to subscribe so you can get more reporting like this. Next step for this bill is it needs to get through the House, and the House is going to try to make it that much more worse. Thanks again.
All right, thank you.